Hello traders, good morning. Welcome again to the live advanced Bookmap webinar. Today we're joined by Scott Pulcini, a professional futures trader. This webinar is held every Thursday at 10 AM Eastern Time and forms part of our education here at Bookmap. Your usual host Bruce is away until the end of January, so in the meantime I'm Sam and I'll be helping out until Bruce returns. Please feel free to ask questions during the session, either in the YouTube chat or the advanced webinar Discord text channel. We'll do our best to get through them. Before we jump into the live analysis, let's just run through Scott's contact info and the disclosure here. You can find out more about Scott on his website, scottpulcinitrader.com. And you can connect with him on Twitter at ScottPulciniTR1. And the disclosure. All Bookmap Ltd materials, information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Live trading is in simulation demo paper trading mode and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. Trading futures, equities and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security nor lifestyle. Only risk capital should be used for trading and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. So just waiting for Scott to arrive. Bear with us for a moment. Let me see if I can get hold of him. He hasn't joined the room yet. Ah, there you are, sir. Hello, Scott.
How's it going?
I'm good, thank you.
Can you hear me?
Yes, I hear you.
Cool.
I thought you were not going to show up then.
It's only 8:03. Come on.
Yeah, maybe a bit quicker than Bruce running through the disclosures. I'll have to slow it down a bit next time.
All right, so you went through all that?
Yep, just ready when you are.
All right, hold on 1 second here. Yeah, my screen.
Give me a second. Pop out. Okay, you're good to go.
You got my screen?
Yep, I got you.
Alrighty. Bunch of numbers today. Bunch of new information hitting the market, so we're still kind of stuck in the middle of this. This is a yes. Here, let me get my drawer going. So this is borderline fail breakout of this multi-week structure. Did it the first time, came down, held, and now this is like threatening to break down here. So this was a zone that I had drawn based on recent stuff. This was the high volume node of this. So I don't usually draw zones at the high volume nodes of balance areas. So balance areas are just two-sided trade where traders are basically placing bets. Longer term traders mostly. I mean, obviously there's short-term traders inside here, but longer-term traders place their bets, and then when the market moves out of here, that's when they have to puke, get out of their trades. So anyway, this zone is right at the high volume node. I don't usually draw those because there'd just be too many zones on my chart, but I keep an eye on it. But this one is drawn because you can see here, buying tail, buying tail, buying tail, and now we just melted right through it. Many times when you rip right through a zone, when you come back to it, those are great trades for failure. So that's what we're looking at right now. This market's still pretty choppy. This is the last volume setup. So the way I trade is I find important areas on the chart with my zones that I draw, and also market profile, Ludwig levels. I'll go over that here as well. So you can see this is a very, very important area. This is what I look for, right? So that zone's important. We're at the bottom. This is feels like a year's worth of balance. This has been going on since 1215, this market profile composite, right? So when the individual days merge, their value areas merge, I put them together if they're on top of each other, and then it forms a composite value area. So you can see here, this just tried to break out. We just had some buy stops, and here we are again. So I think if this breaks down here again, it's adios, at least to this to the blue lug here, Ludwig level, and possibly lower. So you can see, having all this information here. I don't use that much, but the stuff I use I deem important. So this was a very important spot gamma level, this 3,800 put wall. And he's been talking about this all week. We can kind of look at his commentary here in a second, but you can see this market came right down to this area and bounced. So having this options information is very important, because these options dealers, have to hedge with futures, and they're a major player in these markets, right? So it would behoove you to understand and know where these areas are, and that's what he goes over every day. I don't know why every single webinar I turn off these notification alerts, and every webinar it comes back. You guys can hear it in the background. I apologize. I don't know what else to do. Honestly, it's ridiculous. Anyway, so this was his commentary for today. I'm sure he's fine if I'm showing this for one day, but you can go to his website and get this information. Also on my website, we'll go over the hero too, but you can get this an extra week for the free trial on my website. You can just go here. I usually show you guys this every webinar, but some people keep emailing me. Everything I use, there's discounts basically on my website, right? So Bookmap discounts. This is the Apex trader funding that I use to test strategies, and highly recommended. We'll probably get into that if things are slow. Here's the spot gamma, and then if you wanted to get the hero, if you use the Scott 50, it gives you an extra free week for the trial. So you can check this out. We'll look at that in a little bit. But anyway, basically just. All right, we'll come back to that here. I just don't want to. All right, so did something just come out here? Hold on. What is going on here? Why the liquidity? You can see the liquidity just pulled here. What was the number? At 9:08 a.m. So that rally was for a one-day truce in Ukraine. Okay. Yeah. That's all the shorts feel right there. Anyway, all right, so we got a new volume event. That is a little ridiculous, but you got to remember these algos are set for keywords like on Twitter and over the news squawk. You heard the news squawk there. I use Financial Juice. But obviously they just announced a one-day truce and the market just rips 15 points. I mean, just silliness. But guys, these are markets, right? This is why you need to protect yourself with stops, know when you're wrong, so on and so forth. And we'll get into the rants. I'll just quickly show this. This is number one on here. The 5 truths of trading markets. Anything can happen, like right there. Now that I was just ready to short that puppy, that volume event, and then something comes out, right? So that's why you use stops, so you don't get absolutely smushed if something comes out. All right, so we will. I'm gonna get rid of this. This was pre-market. I mean, you've got to be kidding me. A ceasefire to allow people to attend church caused a 15 point move. All right, hold on. What am I doing here? I mean, I'm laughing, but it's not funny, especially if you were short there. I just was lucky I wasn't short yet. And again, why wasn't I short? Because I let the volume setups tell me when to get short, right? So I was waiting for this. This was the most recent before that last pop. That's not right here. So you had 1,300 buy stops or 800 buy stops. It was 1,300 total sweeps, right? So that was that zone, and I was waiting for it to move out of that zone. Now it has moved out of that zone, but I have a new volume event, so I'm going to draw the new volume event. But this is why I just don't jump in shorts. We just went over. I went over that important zone, how we're hanging on the edge of that market profile composite, so on and so forth. But I don't jump in until the real-time volume tells me when to get in, and I avoided a loss there. So let's draw this newest one. So you can see this is a pretty close to a double whammy. What's a double whammy? Double whammy is the dumb money puke into the waiting hands of the smart money. Smart money is the big funds, big firms, whatever. Why are they smart? Because they can trade bigger size and they can make themselves smart. I'm going to get rid of this zone for right now. So you can see this was threshold. So I have certain thresholds for each market that I trade that's deemed worthy of trading from watching thousands and thousands of these. And in ES, it is over 500 or more stops, meaning I don't trade every spike in this SI indicator. So this is the stop iceberg indicator that is the core of my trading, the driver of my trading, because this is the real-time volume that is dictating what's happening in the market. So my thresholds for stops are 500 and icebergs are 700. You can see this got real close. I'm drawing this zone anyway just because of the stops, but this is close to a double whammy. So, and this doesn't mean I just jump in here. I want to see how this market reacts, and I have specific rules that I follow to see how the market reacts to the zone to see which way I'm going to trade. Right? I mean, I have a short bias right now, but if this moves, if this can hold, then this is why you don't want to pigeonhole yourself into thinking something is going to happen, right? Like, you come up every day. And I have these zones that I provide for my room. I'm actually going to start a subscription service, very cheap, for all the markets I watch, like 16 different markets, where you have access to these zones every day. I should have that up in the next day or two. It's going to be like $29 a month, and I think it's well worth it because these zones are absolutely incredible. But I watch these zones and I wait to see how the market reacts to them based on the real-time volume events. So we just got basically 2 volume events in this zone. So whatever way this zone breaks is probably going to be the bigger move. So that is that. 57.50. So then, I'm sorry, take that back. 53.50 is the top of the zone, and the bottom of the zone is 39. So it's a pretty wide zone. So how did I draw that zone? I turned my bubbles off first and foremost, and you want to get this last price line. I know I go over this every webinar, but we have new viewers every webinar. You come to configure, right-click your bubbles, configure visible components, and then click last price, and you'll get this white line. And then you can slide this left. It takes the bubbles off, and you can see the actual traded price. Then all you do is you follow the spike with your little cursor crosshair guy here, where it started and where it ended, and you incorporate all the prices so it only came down here on this move back down, but it was all the way down here when it started, right? So I incorporate all the price ranges in this spike, right? So that is the current zone. I have certain colors for my zones. This was pretty close to a double whammy, so I'm going to make it dark blue. I think those are different colors, but that's okay. Yeah, I'm colorblind, so close enough. All right, so now what I do is, this is proprietary to my trade room. If you join my trade room, you get access to it. It's hugely important, where you enter the price of the zones, and we have another strategy that we trade in the room that actually, a couple of these trades work nicely, reversion trades today so far, and then we have a position trading strategy, and I have like another 20 in the hopper that I've been working on. Especially, we'll go over a little bit of footprint today. I've been adding footprint back into this stuff, into my trading, We'll go into that a little bit. But anyway, I want to enter these zone prices in, and my short-term memory is shot, so I have to go back and remember what I said, 53.50 and 39. Here's your zone. So you come in here, you add in your prices, zone prices. 38, 53, and 38, 39. And then another dynamic feature of what I'm doing, which is absolutely crucial to your trading. Highly recommend if you learn anything from there, obviously the volume events and Bookmap, but you need to be adapting to the real-time volatility. Stop using static stops. I don't even want to know the percentage of people on here, traders on here, that use static stops for their trade. So I put on my ES trade. This is what I hear all the time. I like to risk 4 points to make 8. As you got to adapt to the volatility. The market doesn't care how much you want to risk on your trades. It cares about the current volatility. So, and then I get the question, well, where 8 points from where? What is that? Well, this is what this stuff tells you, right? So when I put trades on, I make the market get outside of a full ATR to show me it's strong enough to keep going or weak enough to keep going, right? And then when I do enter a trade, then I put my stop outside of an ATR on the other side of the zone. Yeah, it's a much bigger risk reward, but my position trading, I'm looking for bigger moves, and it avoids the algo whipsaw, right? Algos are 85+% of these markets, and when the big money's not in here playing, then they go to town on you. And anybody who's traded for any length of time knows exactly what I'm talking about, right? So get your stops outside of these algos whipsawing you back and forth. Right? So that's how I trade. And again, I would love to put on trades. I know I go over this stuff every week, but I love to put on trades. And in my original course, my SI indicator course, I'm still in the process of developing the new one. It should be done fairly shortly. But the old one, and this is after only a few months of watching these zones, I would say, okay, get in right when it breaks the zone and just risk the other side of the zone. And you can still trade that way, right? And it's much less risk, but I have just learned the hard way of doing that and getting filled to the tick and then coming down, stop to the tick. So I've now adapted my trading, and you always have to be adapting your trading. Nothing works forever. I mean, these have been working for 4 years, the volume events, just because it's the driver of markets, but how I trade them has evolved, right? I'm not going to keep banging my head against the wall, like a monkey sticking his finger in an electrical socket, and it just keeps hurting, and I keep doing it. Eventually, I'm like, okay, these are not the ideal entries. I'm going to, incorporate ATR, average range, into my trading, and that's why I trade the way I do. Yeah, you have to risk more, but all you do, if you're risking more, this is how you adapt to it. So if you put your ATR, again, you don't have the spreadsheet, but just eyeballing it, if your ATR is going up, yeah, I have to risk. If I put on this trade, I'm risking 32 ES points. Well, the volatility is telling me that that's what I have to risk today, and I just cut down my size. I put my account size in here, what I want to risk on the trade, and then this adapts, right? So if volatility shrinks down to 4, so you see right now at 8, I can put on basically 2 ES contracts or 19 MES. But if this volatility contracts, right, say it goes down to 4, well, now I can trade 2.5 or round up to 3, right? That's how you adjust your trades, not just trading to static size, static stops and entries, stuff like that. So this is how you adapt to the volatility. You adjust your size. You don't say, "Oh, I only want to risk 4 points when I put on ES trade." You can do whatever you want, but I'm telling you, good luck, because you're not going to make it as a trader if you do that over the long run. All right, so I'm just waiting for this market to move out of here. There was something on Nasdaq that I did not draw. Let's see what happened in here. This was on the stop run as well on the Christmas news. I guess Ukraine celebrates Christmas now. Didn't know that either. All right, I'm going to delete this zone. This was pre-market. Just clear this out and draw that. What a nonsensical move this was. But again, it doesn't matter if it's nonsensical. It is what it is, right? It's like, it sucks if you're short there, but that's what markets do. Anything can happen at any time. That's why you have to protect yourself. natural gas number coming out here too in 10 minutes. Let's see. Let me get this off here, make sure I'm accurate. Don't draw them to the bubbles. I only did that for about 3 years and obviously was having inaccurate zones. Get the bubbles off, draw it to the actual price line, and then you can bring your bubbles back in. Because I used to draw it like to the top of the bubbles and the bottom of the bubbles. Well, that's not correct. It's actually the middle of the bubble, right? It only took me 3 years to figure that out, so I'm a slow learner. All right. So this was the most recent threshold. So my threshold for NASDAQ's 150 in both stops and icebergs. So I don't trade like, traders that get this SI indicator like a kid in a candy store and they want to trade every blip in this thing, right? In my original course, I did have like 100 or 125 for NASDAQ. This is adapting. I learned that these aren't as reliable as 150. So I've increased and the bigger the size, the more reliable the zone is. 150 is my threshold, so this one was 217, as you can see. That's drawn, and I will potentially trade off of this zone. So you can see it's kind of just bouncing around as well. Let's put our values in here too, just see where we potentially make a trade. 10908 is the top of the zone, and the bottom of the zone is 93 quarter. Yeah, actually drew that zone pretty well. All right, 10893 quarter. So we go to NASDAQ. So it's the crude number as well, right? That's at, oh yeah, so actually natural gas is not coming out in the next, I think natural gas isn't coming up, yeah, because he was just talking about it, but then crude is at 10 o'clock on Thursday, or 10 o'clock Thursday, sorry. I'm just trying to think of because Monday was a holiday, that's why things are changed this week for crude. 10908. So meaning if you have crude trade on, you better be careful in about that hour. All right, so that's your zone ATR right now. So I just use the standard. This is just the default ATR on Thinkorswim. It's a 14 Wilders ATR. You can put it on other platforms. And you can see right in the middle there, it's 3.82. That means every 5 minutes, this market is moving about 30 points. So you can see why using it. I literally get emails like this all the time. That's why I keep going over it. Like, I like the way you trade, but I only like to risk 10 points on the NASDAQ to make 20 when I trade. It's like, okay, great. The market doesn't care what you want to risk. You need to adapt to the volatility. It's not rocket science, right? So 3.82. So go down to position trading. So if I want to trade these zones, these are where I would enter my trades, and then it shows you where the stops are. But we'll cross that bridge as we come to it. I want to take one more look at here where we are here, zone-wise. So this is just typical, right? You got a balance here. I mean, you could even make this one bigger balance, but let's just go to the most recent. This is definitely a defined balance. All right, it actually was a failed breakout, and then it looked like it was going to do that, and then it just didn't do that. So we're basically just make this a balance right now. So many times when markets try to break down, they'll come back and they'll retest the bottom of the balance area, then they'll go, or they'll test the high volume node, then they'll go. And you can see, look at this zone, pre-drawn zone. Look exactly where this market stops. So this is why these zones are so important to understand. This zone was drawn from directional conviction. There's buying tail, and then actually it was directional conviction today, and then another selling tail. So this zone is still important, and it happens to be the high volume node of this. And this market broke down, retested. Now that should happen if this volume setup, and I got a volume setup in that zone. So I actually could have been short here aggressively, and as I talk, the thing just free falls. So the short was at 59 quarter.
Stock sell PC 136 contract.
What I'll do here, just because this is such a choppy market right now, I may miss this trade. So I have two ways of trading these zones. I either get in aggressively, which based on what I just showed you, you could be aggressive, meaning you're short right at 59, right? Or you wait for one ATR, you wait for a retest to the zone, failure, then you get in 110% of an ATR. So those prices are on here as well. So an ATR was 10,862.50. Obviously touched that. So now if it retests that zone, fails, which it's probably going to do, because that's what it always does. Not always, but most of the time. Then I get in at, this is just outside an ATR 10 859 quarter. I have to keep an eye on the ATR because it does change. But once I'm in, I'm in, and then I put my stops, and it shows you everything here. So we're going to watch this. I'm hoping this retest. I may miss this trade because I'm waiting for that. There is a chance I miss that and it just does that. There'll be another volume setup, but that's the risk you take if you want to be conservative. This is a much higher percentage trade, waiting for that to happen, showing failure, right? More of a confirmation trade. But like I said, if you love an area, sometimes the market just rips and you're like, why didn't I just not get in aggressively? Right. So I'm just going to wait on this. Let's just take a look at the lugs. But if you love the short here, then you should be in this trade already. So you can see this is actually a good place to be aggressive. I'm just a little nervous. We're above the yellow lug here. The reason I'm nervous is just the way this thing's trading. I mean, we've broken down out of this. So you always try to come up with the thesis or a story every day for the zones, or I do anyway, or you should too. And market profile composite, if you're using this stuff, I highly recommend you do because it's very, very important. What's the story from today? Well, we opened up, broke out of this, juked everybody on the nice Ukraine Christmas story, and then now it failed again. That tells me that's about to happen. So that is that on top of the zone stuff that I just showed you. That is a reason you could be short. Let me go. Let's see. I'm going to put on half size here just so I can put on a trade on these webinars because we've had this little spell where there's been no trades. So 1.81 is my size I can trade. This comes back to my entry. I'll go short half. If not, just in case it does free fall, it looks like it's going to retest and fail anyway. But if it doesn't, I'm going to at least have something on. So I'm not bitching the entire webinar that I missed a trade, which I tend to do. Let's see, 59 quarter. That's if this just comes down and fills and goes. But other than that, now I'm waiting. Guys, I cannot tell you how often this happens. This is why we have this as one of my trades in my trade room, because it happens quite frequently. So anyway, if that happens, then I'll put on 2. All right, so that's loaded. Let's see what's going on with yes. So yes is never, oh yeah, it did. All right, so this looks like this broke a ATR out of the zone as well. Let's just check, make sure this is correct. It's actually up to 8.46. So it needed to get down to 30.50 was an ATR. So that was 8.5 points below this zone. Did it get to 30.50? Looks like it was real close, shockingly. Came within a point. So this is not an official ATR retest yet for this. Right. Doesn't mean I can't go short. If I want to be short aggressively, I would just short at 29.75. This was the ATR. So what I'm saying is how I validate these zones, whatever way I want to trade. So for a short, if I want to be conservative in my entry, I wait for the full ATR. I wait for the retest. I wait for the failure. Then I go short. This did not get a full ATR yet. So if this comes back down, I have to make a decision. Do I want to go short aggressively? Maybe I can do half size in this as well, which I probably will do. I don't usually do that. I mean, I don't like doing that because it's like, if I'm getting in, I'm getting in, right? You got guys that do it because you sit there and you mess with your mind because you're like, well, I put on a half size and I wasn't really sure. If you're putting on trade, it should be a full size. I'm doing it more for the webinar just so I can actually do some trading because the last few weeks have been pretty bad as far as actual live trades. I mean, it's not a terrible trade. Again, I'm trying to be a little more conservative until this thing can really show. And the thing, actually, I take that back. For this market, because if it moves back down, I'll be short NASDAQ, at least one of them. And here you can see this isn't as clear cut. Yeah, we're breaking down on that market profile composite, but this is smack dab in the middle of this. This is where you're going to get that type of trade. So you don't want to be aggressive there. If this was breaking down out of this, like through these zones, then yeah, then you want to be more aggressive. So I will.
Gas iceberg by NG 160 contract.
The net gas number. So I will wait for full ATR retest value.
160 contract.
And again, if I miss it, then at least I'll be short. I mean, meaning if it just rips down, I'll at least be short 1 NQ. This did not retest this zone yet. So I consider a retest at least if it gets within 10% of an ATR. So ATR is like 30, it's 30 right now. So I mean, meaning 3 points away from this zone would be an official retest. So meaning 90-50 or 90 quarter. That would be an official retest of that zone. It didn't get up there yet. So now it's just algoing, right? This is why I say, you know, especially the other thing, you know, you guys get trades on and then you love to trail your stops. Well, you don't think these guys that write these algos know that's what 99% of traders do? You know, you get short, you're like, yeah, I got it. Oh, I'm gonna move my stop now. I'm gonna move it right there, so I at least break even. And then it comes and stops you out, and then it drops 400 points, and you're beside yourself the rest of the day. Don't get algoed. All right, so just wait to see what happens there. Did hear something in natural gas. Take a look. This market is the algo king, as you can see. Looks like a Christmas tree. That's algo. So the other thing we can look at too. This is Bookmap newest feature. Incredible. Have it up. We can go over how to set these up, but this is market map where you could put defined sizes in there, larger sizes, so you can really see. I mean, I understand you can see liquidity here, but it gets a little convoluted with kind of like natural gas. Actually, we'll look at the market map here for natural gas, like that. Yeah, you can see this defined liquidity here. Again, we may have already tagged it. I wouldn't be surprised. Yeah, surprise, surprise. But when you look at it this way, this is, you know, I have between 25 and 1,000. I think I put in, let's see here, right there, Trader Map Pro. Let's see what this looks like. All right, so that, there you go. So I'll give anyone one guess where this market's headed. See, when you look at it like this looks a lot different than that, does it not? Right, and the whole point is when you look at it that way, you're not like thrown off by these algos that are just jumping in and out. All right, I'm officially short Nasdaq. I'll come back to that in a second. Let's put our stop in. One more look at ATR. I should have been on top of this before. I think it's right around, it's 31.36. So I got in a little early, I think. Should have been in at 75. I got in like a point early. So my stop goes 10.942. I only have one on because I was waiting for a retest of that zone. So 10.942.50. Again, guys, I know what half of you, more than half of you saying, well, what the hell, man? I don't want to be risking 100, whatever that is, 80 points. That's more than 80 points, isn't it? 60, yeah, about 80 points. That's craziness. Guys, the volatility is telling me this market has the especially what we're looking at as far as market context, this has an opportunity of going 2, 3, 4 times that, right? This thing is broken out. This value area has been here since the 15th. Or this one's the 21st, but this is multi-week value area. You're long, you're a big longer term trader, and this thing is starting to do this. There is a lot of investment in this area. This market could move again 200, 300, 400 points today. I'm risking 80. Right? So my position trading, I have a trade that's more of a scalp trade. That's the reversion trade that we're doing in the room. And then I have a position trade. So I'm looking minimum, I think this can get down to the blue lug, right? And that's 160 points away. So that'd be 2 times my risk. Those are profitable trades, right? So I will hold that. I mean, I was hoping to get on 2, and then you can split them up, because I don't like to be all or nothing, right? I like to get out at important areas, and that's another factor. Again, this is straight from trading in the zone. I have tailored it to what I look at, right? But I get out at I pay myself, see right here, number 5. I pay myself as the market makes money available to me. Again, this is straight out of trading in the zone. Highly recommend you get the book, the audio book. And these are where I pay myself. Ludwig levels. Again, go to ludwiglevels.com. She's got a free 3-day trial. You can try them out. Say some on the Bookmap webinar, special pricing. I know I say it every week, but trust me, I'll get these emails. What are Ludwig or lugs? Or so that's why I explain it. So these are the places I pay myself: Ludwig levels, market profile, composites, highs, lows, points of control, VWAP, standard deviations, We'll look at all this stuff. Spot gamma levels. We saw the market bounce off, the ES bounce off one earlier, and struggling to get through heavy resting liquidity. We'll look at that. Important predefined zones. Those are the zones I was showing you in the bar chart, right? So these are areas where I'll pay myself, but I always try to hold a portion, again, if I had multiple on, till we get to the major lugs and or an opposing setup, right? So you're not, so I pay myself as I'm right. So for instance, if this came down, I get short, I wouldn't be getting out of the L lug here, but you know, we get down, for instance, if I end up getting 2 on, this is not, there's a high percentage this will come back to that zone again, and I'll have 2 on. Well, then I'll be watching, like you have baby lug here, and that's extreme standard deviation of VWAP. This is VWAP. This is one standard deviation called daily value area. Here's 1.5. I'm sorry, the daily value area is 1 standard deviation. This is 1.5, 2. This would be almost 3 standard deviations. So if this market were to rip down there, that would be almost a 100-point trade. I would get out of 1 there and then try to catch the blue lug for the second one, right? That's how I trade. I'll always leave a portion on for the big move, right? And this could be the big move. This is why I got in half here, because this could just free fall now, right? So, but odds are, we'll come to natural, grab back to natural gas in a second. Odds are it will torture me for a while. And then looky here. Let's see, did we get down to an exact ATR as usual? Of course, forgot that price. I think it was $29.75. $29.75. Let's just make sure this is correct. Now it's actually down to 8.14. You got to keep an eye on this until you get your trade on. And you can actually adjust your stops with it too. I've been burned doing that. I usually just keep them on once I put them on. We'll go over that if I put this trade on. But anyway, with that new ATR, the full ATR below the zone was 38.30.75. So now this is an official, you can see it got it right there and then bounced, right? So this is an official ATR, meaning it's an official short setup. So now I could get in aggressively or wait for ATR retest failure. Again, I'm going to do that because where we are in that chart, and I'm already short NASDAQ anyway. So if this does crater, at least I have something on. And you can see what's below here. So let's look at our market map. Guys, when you understand what's really going on in these markets, I know it seems very simplistic, like, oh, you're looking for the bands of red, like the liquidity. Yeah, it's actually that simple. To come up with a thesis for the day, it's part of the puzzle, right? So we've just talked over so many reasons why this thing could and should break. Doesn't mean it's going to. I come up with my thesis, and then I wait for the real-time volume setups, right? So we saw that liquidity, but I mean, so look down here. Yeah, there's a band up here. Which one do you think we're going to go to first? Well, then how you determine that is how these are reacting to the real-time volume events. And then you can get short, and these can be your targets. Very, very, very high percentage we hit these today. Right? You can see these guys can't be real happy. The market, and this is another thing too. So if you are playing for these, be ready for this game. Right, so the market, and you can see it on this as well. So the market came down, started to tag it, and then these algos pick up this size. You see the difference in the size here? This is all this is showing you, right? This is just showing you this in heat map form. So the market came down, these algos picked up this big order, and then they ran it away. So my point is, if you are playing for liquidity levels, and you don't want to be tortured, trust me, this will still come down and fill this order, very likely, I should say, because the big money will push it into their order. But the first time down, if you don't want to be tortured, then just hop out of a portion of your trade, right? If you're trading micros, whatever. And guys, there's nothing wrong with trading micros, right? It allows you not to be all or nothing. There's so many of you trading 1 lots of ES, which is appropriate for your account size. But what I'm saying is, why be all or nothing? Put on 10 micros. Like, who cares? There's nothing shameful about trading micros. I trade micros on a couple of my the Apex accounts that I'm using to trade strategies, and one of them's live right now. That one of the reversion trades that we're doing in the room. There is nothing wrong with trading micros, and it allows you to piece out at where areas that you pay yourself as the market makes the money available to you at the important areas. These are my important areas. Wherever yours are, that's where you piece out. You don't have to be one or nothing. You're trading just straight one lots and getting out of everything at once, then you're costing yourself, in my opinion. So I'm hoping this retest fails, and then I'll go short there, and then I can actually add to this as well. So this is, guys, this is what you should expect. And the more you watch this, the more you condition yourself, and you're just ready for the nonsense, right? It's like very rarely does the market just straight beeline, right? It does sometimes, but most of the time, 85% of the time or more, it does that. So if you are ready for that, you're not like losing your mind on every rotation. It's just the way it's traded. Speaking of that, let's just take a look. Again, I'm incorporating this more and more in my trading. I use this for many, many years. I use market delta for when I first started struggling as a scalper back in mid 2000s. Dr. Brett Steenbarger. Speaking of which, here he is. This is the book that he wrote. He sat behind me for a year and watched me trade, and then put me in his book, right? So when this started going down, and actually at the end of the book, it talks about like I'm the entire afterward. You can read my whole, rise and fall from scalping. But this was right, like he was finishing this book right where I was like done, couldn't make money anymore scalping, right? Guys, and that's the other thing too. I'm a real trader. I don't sit there and show you guys Lamborghinis and tell you how great I was. And yeah, I made $10 million in 2003, so on and so forth. Yeah, I did. But guess what? I couldn't make money anymore, right? I went from rags to riches, and now I'm on my way back with Bookmap. But I mean, my story is real, and it resonates with a lot of traders, because a lot of traders, maybe they didn't make that kind of money, but they were doing well, and then it just stopped working, right? Or whatever you were using. And that's why you have to be able to adapt to these markets. But the point is, I'm not in here saying, hey, I'm this incredible guru, and here's my Lamborghini and I never lose, right? But it should resonate with you that, there's a saying, having money and lost it is way worse than never having the money at all, right? So it should give you guys inspiration that I can take that kind of I was a multimillionaire trader, right? And then all of a sudden could not make a dollar. So then I always get that question too. I don't mean to go off track here, but we're just waiting for these zones to retest, because they will. I always get the questions, well, if you made all this money, then why aren't you trading big anymore? Well, guys, when you have a lifestyle, and especially as a trader, right, you start losing, you're like, I'll get it back. And then you don't get it back, and your lifestyle starts to eat away at the money you have saved, and then that's it, right? So that's my story. Hopefully it's inspirational, and hopefully you guys understand that I'm a real dude, and I'm not just showing you winning trades and so on and so forth, right? Like especially in my trade room, they see every day, they see the human side of me. I'm human. I've been trading for 25 years, but I still, hey, look at that, there's a retest of the zone. You guys ever see that? I still am human, and I still lose my mind, and I still make stupid, silly mistakes. I'm much better at it, but the point is that should resonate with you guys. Instead of thinking like I'm God almighty trader, you're like, hey, he's kind of just like me, but you can learn from my mistakes. That's the whole point of the trading room, right? So instead of having to go through 25 years of beatings and ups and downs, you can kind of learn from my mistakes and be like, yeah, I don't want to do that. Hey, I don't want to act like that when I'm losing, whatever. Right. So that's the point of my trading room, and that's why I do it. One, it keeps me grounded. I was just talking yesterday. I was about to go on tilt. I put on a couple trades before the numbers, and then I can't remember. I don't want to I'll go down that rabbit hole again. But the point is, it keeps me grounded. One, two, I like teaching. Like, I like showing you guys what not to do so you guys can be successful. And whether, there's some people out there like, oh, that's whatever. So, I mean, you believe it or you don't want to believe it, but in my trade room, I do this every day, and I'm human, and I want you guys to learn from that. All right, so that's enough of that rant. Here's a retest that I was expecting. We haven't quite gotten here in NASDAQ, but guys, you see, this is why you don't trail your stops in the middle of nowhere. You're going to get algoed are you going to once in a while catch that? Where you say, oh, I'm short, I'm going to trail my stop, and then it goes, and then you can keep moving it down? Yeah, most of the time. Did I mention 85% or more of the time? You're going to get this trade. Do you want them to take your money? They know nothing's going on. They sense it. Not know. The algos can pick up just like we can pick up and see. They can see as well. When nothing's going on, it's okay. Let's just push this market as far as we can until somebody stops us. And then let's push as far as we can until somebody stops us. That's that. Don't get algoed. My stop is well above here. Does it mean it's going to be right? I'm going to be right on straight? No, but I'm forcing this market to push through this volume event, push an ATR outside of the zone to prove me wrong. If something new comes in, then I will change my stop based on the new setup. But I'm not going to be algoed. It's hard enough watching it, let alone getting yourself stopped out in the middle of nothing. And that's where we are right now. This area is nothing. It's just literally void. It's algo void, right? And this is all fractal. This is forming what? A balance area. These are traders, algos, running it back and forth. Traders getting loaded up. The break out of here will be the move. Or head fake, then the move, right? So don't get algoed. And you can see these are the zones that I have on my 60-minute. They transfer over to the 5-minute. We're just bouncing around this zone, right? So at the end of the day, I'll probably remove this zone. I think I'll probably get the zone offering the subscription. I'm gonna try to get that done tonight because it's not that complicated. I'll probably just have like a Google Drive where you guys can go to, and again, it's not rocket science what I'm doing, right? But it's just going to save you time. I have to do it anyway, so I'm looking at 16 markets, so you can be like, oh, what is wheat look like or beans look like, right? So then you don't have to go in and draw all these zones every day. And here's beans. What do I see here? Nothing's really fired off, but this is what you should have. Any market you're trading, you should know exactly where you're at, bigger picture. This looks like that to me. And the bottom of this zone is basically the high volume node. So this is an area. So for instance, if we're on this webinar and this market moves into this zone, what's this zone? This was a gap up, directional conviction. And it happens to be the high volume node. If I get a volume at the bottom of the high volume node, on top of it, if I get a volume set up in here, this is where I could be aggressive long. I want to look at my other stuff, but this is why I use these. You would be amazed if you just waited for these trading zones and with a volume event, how good of a trader you would be. You would be amazed. Instead of trying to catch every rotation in the market, which a lot of you are doing and a lot of you are getting your head ripped off. All right, so we're just getting algoed right now, and I fully expect it. Still waiting for a retest failure from there to go short. We already have a retest here. Now if this comes back down, now I can set up this trade. I already know this got an ATR below. If it fails again, I'm going to be short both markets. And we can play some, we have a thing in my room. I haven't done it for a while, but there used to be a trader in my trading firm. Every time the market would go up, he would play the Jefferson's theme song. If you guys are too young to put it on, I'm talking about, but guys my age know what I'm talking about. The Jeffersons moving on up. So you blast that music throughout the trading firm, right? So what I do a lot of times in my room is if I have multiple markets on the same direction, I'll play some theme songs. So moving on up is for up, and then Highway to Hell is if I'm short multiple markets. So we may have a Highway to Hell theme song here if I'm short both ES and NASDAQ here. So enough talking. Let's get this trade in. And then I didn't even ask, I've been rambling if there's any questions so far. Let's just make sure everything, the ATR is exactly this. So I can short when this comes back down, 38.30, I can put on 2, and I stop out at 62.50. What? I can't believe he's risking 30 points. Well, that's because of volatility. He's telling me I have to risk 30 points not to be, and I know this market can move probably 100 if this gets rolling. Well, that's where I'm short. We'll be short. This is the pattern over and over and over and over and over. Any questions, Sam?
Yeah. First of all, you heard it here first, guys. Perhaps you can find an edge listening to different music tracks. Maybe you could do some back testing on that, see which track performs best.
Oh, absolutely. Absolutely.
Yeah.
We have an indicator in my room too. The garbage truck always comes on Mondays, so every time the garbage truck comes around on my webinars, it's a signal to short, and it works very well.
Yeah.
Some people use astrology. Why can't I use the garbage truck?
Yeah, exactly. I'm also a little bit disappointed you don't have a Lambo. I thought I might be able to get a ride one day, maybe, but no.
Yeah, no Lambo. No Lambo.
Great stuff there, and lots of important points. And a good example of Mark Douglas's #1 rule there: anything can happen, with that Ukraine news early on. And we have a question from Luke. How did you see that news so quickly? I don't know if you have a squawk or Squawk box, is it?
Yeah, I have the squawk box going in my room. You can hear it. Yeah, I have a channel where you can hear the news. So I heard it, but market told me. That's why I said, I go, what is going on here? It was at 908. I knew there wasn't a number. That was the spike. And I saw this liquidity pulse. So these algos immediately, that's why you don't trade off the news, right? You don't, by the time you hear it, it's already up here. And then all the guys that piled in that, manually are trading, then they get that. And they're like, what? And they get killed. So stop trying to trade news events, first of all, right? Let the market develop, and then you can trade off of it. That's exactly what we're doing here, right? But I saw it first, and you guys heard me. We were on the webinar, and I said, see how this liquidity all pulled? See how it got like black hole? I'm like, well, something's coming out somewhere. And then I heard him say something as a ceasefire, and then he said, a 1-day ceasefire for Christmas, and that causes a 17-point ES move. Whatever, it is what it is. But I just heard it and I saw it. That's it. I didn't do anything off it. I'm going to now, potentially. Right. So hopefully that answers that. But yeah, we have this new squawk in part of my trade room.
Yep, and we've got a couple of questions on your thresholds as well. The market pulse thresholds.
No, this is not market pulse. That's not even released yet. Bruce doesn't want me even showing that because they're going to be getting a bunch of. But I have it on I don't have it up right now. But it's not released yet, and they don't want a bunch of questions on something that's
right.
Not public. What I'm using is this Trader Map Pro. Right. So what I did here, we'll just do this since nothing's going on as usual. Oh, by the way, this is coming down here. This will fill. My point is, if you are watching this liquidity, and this is exactly where I'm going to get filled, so hopefully it busts through there this time. These are algos that pick up that size and then run it away. So my point is, if you're short and you want to get out of some, so you don't have to go through this torture, get out of some. Again, this is exactly what I said. It'll make it back down here because why? Because these players will push it down here. Right? How do I know all this? Because this is the game I used to play, guys. This is what I would do all day, every day. Look at below here. Where do you think we're going? Right? It's like, does it mean this is where you have to determine, okay, when's it go time to get down here, right? And we have a volume event, so I used to play this game. I used to literally have like 1,000 lots, and I go over this every webinar, I understand, but it's just good to watch. And I'm going to have a video. When I release my new course, we're going to do like a presentation, and I'm going to show you guys me trading live back in the day. Again, it's not going to be for kids because it was not I had some choice words all day long because if I don't talk out loud, my head will pop off. But anyway, I would put my orders in like this, and then I would just play games, and I would the market would do something like that, and then I would wait, and then I would test it. I would sell some, and then there would be no response. And I would just step on the gas. I'd sell another 1,000, and it would run right into my bid. And then I'd be out, right? So that's the games that are being played. This is why Bookmap is the key to my trading. This is why I'm back in the game. If I did not have Bookmap, I would be in medical sales. I had to leave the business, so I went from multi-millionaire Lamborghini guy, I didn't have a Lamborghini, but you know what I mean, to kissing doctors' asses all day long because I didn't have an edge. There is no bigger edge, I can't say it enough, than this information that Bookmap provides you. I mean, this is why I'm doing the webinars for him, because I am so grateful that I was able to get back in the trading game, because I was at best, average trader, at best. And that's with all my knowledge, right? I needed this information. That's why I keep telling you guys, I don't give a flying, you know what, how great of a market technician you think you are. You do not have all the information if you're not using this stuff. Hey, look at that. Look what filled there. Shocking. So now I'm short. I'm doing a lot of chirping today. I'm like losing my breath. I'm talking so much. Let's see. I'll just take one more look at the ATR. I usually don't change this, especially for reversion trades in the room once I'm filled, but I just want to see. See, we're back up to 8.44. So you can adjust your stops based on this, right? So down here, fill was a little higher than that. Now my stops at 62.75, right? And again, I don't want to hear it. Why? I don't want to risk 30 points. I don't want to risk 30 points either, but I've learned my lesson not to mess with these algos.
Stops and Icebergs by AT 151 contracts.
Little hogs for you guys. I'm not going to trade hogs on the webinar, but I'm watching all those markets, by the way. So anyway, once again, why do I put my stop that far? I'm forcing this market to get through this volume event and a full ATR outside here. Then I say, okay, I'm wrong, uncle. Right? Till then, especially with my thesis and everything else, I'm thinking we can get, and then this is the ultimate thesis, is taking a look at this. Where do you think we're headed? Again, every webinar, I make a golf bet. Whoever wants to bet me golf, I will bet we will tag. We'll even use the same amount of, so we'll say 20, what is this, 20 points? So I'll bet you we get down, and this would actually be still inside that zone. Yeah, it would just be about 30 to 50. I'll bet you even money here that we get down to this liquidity before we get up to the same. So 20 points down to liquidity before we get 20 points up. Whoever wants to bet a round of golf, let's bet, and then let me know when you're in Scottsdale, and I will collect on that because that's where we're headed. I'm not saying it's going to be direct, but guys, what power this is. So anyway, I got off track there. So my settings for this are, let's go in here, 100 to 1,000. So I just want to see only, this is different than this chart, obviously. This shows everything, right? This is important, obviously. You don't get the SI indicator stuff here. I just have the Delta CBD on this chart. This is where you get everything else. But this chart is just specifically showing me 100 lots or more in the order book. Very, very important. These are the big players, right? I know 100 doesn't seem like a lot. Bruce was trying to do, like when he first was showing me this, he's like, yeah, I do 25 as the big player. I'm like, I think he even said 10. I'm like, Bruce, 10 is not a big player. Like, yeah, it's a decent sized trader, but I want to know like the whales. And I know you think 100s are not whales. And the way the market trades nowadays, yeah, in the old days when I traded, it was thousands, right? And I was one of those guys. But now it's 100 just because there's nothing to lean on in the order book, right? Back when I was scalping, literally, and anyone who traded back then knows exactly what I'm talking about. It would be like 1,000, 2,000, 2,500, right? It kind of looks like, actually, let's look at bonds. Bonds probably looks a little bit like that now. They're not bonds, but 10-year notes. That's what the ISK used to look like. So why is that important? Because if you're wrong and you put on a trade, you can turn around and get out. Now, if I were to sell like 1,000, look how many price points I'd have to sweep to get the hell out of the trade. Kind of like the stop run, right? So that's why a 100 lot nowadays is actually a very big trader, right? Not that there's, guys still trading thousands, but the point is they're willing to lay it in the order book, and it may run, like if something comes out right now, it could just run over it, right? So the point is I use 100 to 1,000 there. NASDAQ I'm using 25 to 1,000. You could make it 10,000. I don't want to cap on the size on the upside. I want to cap on the downside, so I'm not looking at irrelevant size, right? So here's what NASDAQ looks like. So this is more of an, you see that just pull? This is more of an algo, but you can see this is probably where we're headed very soon, right? Speaking of which, and we never retested this zone, but I was already short there. So now short both. If I had full position on it, I would play high with a hell, but we're not going to do that right now. Or the other one's free falling that I'll play. Any other questions?
Yeah, we've got another question on thresholds. This time the iceberg, stops and icebergs for NASDAQ. What are the thresholds you're using there?
Yeah, I went over that. 150 is what I use. For,
you went over that. Okay.
1 second here. Forgot to put this order in, of course.
And I had a question.
150 for NASDAQ.
I had a question on this NQ short. I think it was quite an aggressive short. Maybe it was mainly for the benefit of the webinar. But is that something that you typically do? Because I think it's quite a common scenario where perhaps you don't get filled, but everything looks good and you don't want to miss out on the move.
Yeah, I do that. That's what I was talking about, right? So if it's an area that like I said, I could have gone full size here. I determine that based on, that's what I go over. This is what we talk about every morning in my trade room. I'll go over the main markets and I'll say, this is where I think it's going to happen. I want to be aggressive versus not aggressive, right? So when we were looking at this, remember we talked about this as far as this was kind of showing its hand. So this is today's trade. And let's put this. Market opened up outside of this. Retested it, try to get back inside, no dice. That's telling me that's going to happen, right? That's on top of what we saw in the, of course, I lost my chart here. Hold on. In my zones, that I also are an integral part of my trading. And we came up with a story here too, right? So this market opened up. This is today. Opened up here, first of all, gap lower, so I'm going to draw a zone here tonight. That'll be in there. Then we opened up, directional conviction, right through this zone. Came back through it. Actually, I'm going to keep it just because it's the bottom of this balance, but I drew it because of all this, buying tail, directional conviction, buying tail, buying tail, buying tail, buying tail, right? So that's why this is here, but we ripped right through it. Right there, that was information. This market, if this was going to just bounce again, it should have held. It went right through it. It did bounce. This is the juke move on the breakout of this. This is what happens all the time. Comes back. What is it test? High volume node, which was also what? This zone that I had already drawn from these two buying tails, that is actual direction conviction. So this zone is still valid. Then it led to another. Tails are just instant rejection, right? So you can see this was perfect. I didn't do it. This was here before the open. I put this based on these two tails. But the story I got was, one, it ripped through this, came back, held where it should have held. Now, if you get a volume setup, my point is I could just be aggressive because this looks like it's going at least to this zone, maybe even lower, probably even lower, I should say. Because why? Because now you're below multi-day week structure. All the traders that are long in here that were holding are like, oh crap. The first time they thought they got lucky, and then they're like, oh no. And now you're going to start seeing some stop runs, or you should, right? So I know it's simplistic, guys, but that's actually, if you make your trading simple, you're going to do much, much better. That's what's happening. So now my point is, if you're getting volume setups, you could be aggressive. I got in one, I could have got in two, but I knew if this did move lower, I was going to be short ES2. So that I am pretty much aggressively short, right? But I would have gotten short on the retest failure of that zone. It just didn't happen, or I would have added to that aggressively. And that aggressively, I would have added to that trade. It just didn't happen. At least I have something on. That's why I did that. But my point is, that's discretion. That's once you understand how to read markets and understand how the markets react into zones, to market profiles. That's what I teach in my room, right? That's what we go over every single day. Once you understand that, then you can say, I'm not waiting for a retest. This is not going to retest. I think this is going to zero. And then you just get in once it gets outside of an ATR. You don't wait for the retest. So this one didn't retest. ES did. That's the risk that you take waiting for a retest, right? And that's your own judgment. I can't, you may be looking at other things. I'm sure many of you have 85 things on your chart, right? And if they're all lined up, which they never are, that's why you don't want 85 things on your chart, because you're already conflicting information. But if you get enough thing, we talk about the scale all the time, right? There's always going to be bullish factors, bearish factors. But if you get enough on the bear side, then you say, okay, I'm taking, enough of your stuff that you look at looks bearish. Then when you get a volume setup, you say, I'm taking it aggressively. I'm not waiting for a retest because I may not get the retest. You got to be okay. If you're going to wait for the more secure trade, you got to be okay. If you're waiting for that, sometimes it's not going to do it. And you got to be okay with it. Because trust me, even if you miss this one, yeah, it's a higher price. If this starts moving lower, you're going to get a new setup, especially if it breaks this spot gamma level. And you can see, once again, it bounced. I didn't get out there because, I'm not risking 30 points to make 4, right? I was just hoping it could melt right through there. We're getting the time of day where I'm probably going to be tortured to this trade. It would not surprise me one bit to see this do this 15 times, and then once the guys get back from lunch from New York, and then they lay into it, and then it breaks, right? Doesn't mean it can't happen right now, but this doesn't surprise me, right? Especially off of, this is a major, major level. That's what I was getting into. I think it could break down through there, obviously, or I wouldn't have gotten short right here. It even says, right? And he's starting to put this new map up. No, he doesn't have it on here, but he even says, let's see. And large support persists at 3,800. So 3,800 is in the cash market. That's 38.25 in the futures. And that's what, when you get spot gamma, you put these directly onto your chart, right? Guys, this is the game. This is why I don't trail my damn stops. I had some profit in that. Did I say, oh, I'm gonna move it to break even? Now you're out. And then it's gonna do this, and then it's probably gonna do that, and you have nothing on. Please don't get algoed. Did I mention that today? And then what else was I gonna say? I forgot what else I was gonna say. So did that answer that? I can't remember what the question was, but hopefully that answered it.
Yeah, no, that pretty much answered. Thank you.
Sure.
We have one other question as well. Souza says, if volume events are your main driver for any market, why do you not trade currencies? Because Bookmap also works with the futures currency CME markets.
Don't even get me started on that one. Well, I did, but mysteriously, like 6E, I don't trade Forex. First of all, I don't get that information, but you can get information on Bookmap on the CME currencies, so the 6E, the 6J, and I did trade those, and they're part of my prior course, my original course, the SI indicator course, because mysteriously they stopped showing icebergs in the markets. And I'll give anyone, you can go ahead and guess silently why they did that, and I'll go ahead and give you my opinion. Again, this isn't, I don't know for sure, but I will willing to bet money because I just know how it works. I know how the big money runs the show. They are the driver of these markets, and they make the calls. I will bet you enough banks bitched that people can see what they were doing with their hidden. That's what icebergs are, guys. Icebergs are hidden orders in the order book. They're hiding them for a reason, right? Because they don't want to affect these markets. They put in big size. That we just saw what happens when a market originally comes down to the size. Where's my market map? So we saw when this market originally came down, eventually broke through, but we saw when these algos picked up this size, what happened? You can't see it now. This was 500. Market came down, algos picked it up. Yeah, let's go ahead and run it away and make them try to chase. Right? This popped 12 points away from this liquidity. That's why you can't drop in big orders. You drop in big orders, just like the news event, these algos pick up that order and they try to make you chase the order, try to make this big trader chase the orders and get worse fills. They get better fill because think about it. They know if I put in 500, they know I need to buy. Well, you think they're just going to sit here? No, they're going to say, okay, you want to buy them? How about you come up here and buy them for me up here? How about you pay 42 instead of 30? See how the game is played, right? So then once the guy chases it up, then it'll go, right? So that's the whole reason these firms are using icebergs. They are hidden orders in the order book. When they put an iceberg, let's see, there's a couple markets that were big ones today. But when they put an iceberg in, actually this was part of this one right here. So this was sell ice. This was not quite threshold. It was close. We talked about this. This is part of this double whammy. The dumb money puke into the smart money. These are the smart money. They only have to show, like, I don't know the exact percentage. I think it changes, but it's like 10%, right? So if they've got 700 they want to sell up here, all they have to show is a 70 lot. And then the market eats into it. And then all of a sudden, they get all these aggressive buyers into the 70 lot. I'm doing air quotes. Then it's actually 700 behind it. Well, they have to hide their orders or else the algos will run it away from them because they know they need to do their order. So back to the CME, or not CME, the currencies, for some reason, the icebergs, they don't show them anymore. So Bookmap doesn't show them. Well, the reason Bookmap doesn't show them because they're not getting the information anymore. So again, my personal opinion, and I would venture to guess I'm right, is the big money said, we don't like that they can see our orders and with icebergs, please remove them, Mr. CME. And lo and behold, they disappeared. So you can still see stop runs, but I'm not getting all the information in those markets anymore, so I'm not trading them, right? Because it's the driver, like you said, it's the driver of my trading. So that is my personal opinion. There could be other reasons, I don't know, but all I know is you can't see the icebergs in there anymore, and I'm not trading them. I got enough product. I mean, you can see, guys, all these markets I'm trading, and these are where you're going to get with my zone offering, the subscription. Again, it's pretty damn cheap for what you get for them, but you're going to have all these markets. I mean, even if you don't trade these, you want to start watching them because, guys, it's all the same stuff, man. I don't care if you're trading crappy corn. It's all the same stuff. Know your zones, use your Ludwig levels, use your market profile, look for volume events at threshold in these areas. If you are pigeonholing yourself into one market like the crappy ES that most days just does this rotational nonsense, you're doing yourself a disservice, especially with the power that you have with this information. Start watching. I know people don't have bandwidth to watch 16 markets, but you should be watching at least, 2 or 3. So if nothing's going on in here, you can jump over to crude, right? Like, and actually, I missed a trade here because I got on this webinar. I was waiting for a retest failure of the zone, and look at that. You guys ever see this routine? It is I don't care what futures market you show me. It's the same stuff as long as you know the thresholds. And that's what my SI course shows you are the proper thresholds for each of these markets. This was a monster stop run. This was an ATR, more than an ATR. This was a reversion back into the zone. And this is not coincidence. This stopped right in the zone. These are loaded up traders. Please come back so I can get the hell out. And then it takes off. This is the game. I mean, if you like, 150 tick trades, I was going to trade this, and just look at right here. I was watching this, and I got sidetracked because I was getting on the webinar. Thanks a lot, Sam. And I didn't get long that. I'm just kidding.
Yeah, you can blame me. That's fine.
Guys, you're looking at it. This is the routine. This is the game. If you understand how to trade these, you are now in this long for 100 and almost 200 ticks, 150, 170 ticks. It doesn't matter what market you're trading, right? So you understand that. You understand algos. You understand, especially at this time of day, especially in equities, you are very much probably get that, right? So as long as this doesn't get all the way through the zone and ATR, then I just sit in it. And or an opposing, if another setup comes in and it turns into a bullish setup, well, then I'll get out. But until then, they can algo all they want. They can algo for the next 6 hours. I don't care. I'm short. I feel like I've been on this webinar for 3 hours. Any other questions?
I think we're getting through
a lot of talking on this one. I don't really talk this much.
Yeah, we're more or less finished the questions. I've got a question of my own. I mean, you touched on it earlier about making human mistakes, and you've obviously got your rules, and you've showed that list from the trading in the zone there. But do you have a process in place to kind of keep your mindset in check? Because it's one thing having rules, it's another thing following them. And
you got that right. What like I said, what keeps me in check most of the time is my trade room, and I do 2 live webinars just like this every day. Most every day I golf on Friday afternoons because I got to get the hell away from these screens once in a while. That helps keep me in check because even though I do make an ass out of myself a lot of times, like when I go on tilt and I complain nonstop, again, I'm human, but that is very minimal for what I used to. Like, I used to be a complete hothead, right? I'm a very emotional guy. Like, I wear my emotions on my sleeve, and when I feel like, what was yesterday? So it was something. Oh, I remember. Yeah, this is what started the kind. I almost went on tilt yesterday. So we were working a reversion trade in my room, and we were waiting for a retest. Or I had my stop in, or I can't remember exactly, but my stop was like, this was in the ES on top of it. It was like we were at, I don't remember the price, but it was like 38.30 was a low in ES, and my stop, because I was trading the micros for the strategy in my room. My stop on micros was like 30. It was 4 points away. So I hear myself get stopped out, and I look at my screen. I'm like, well, the market didn't even trade down there. I'm like, what the hell is this? And then that's when I start going down that rabbit hole, right? Because I likened it like, just imagine someone comes in breaks through your window and steals your wallet off your desk. That's what it feels like to me, right? Because it's the same thing. Someone just stole money from me. That price did not trade, it obviously traded, but my point is, it didn't trade in the big product, and I understand a couple ticks of slippage. It shouldn't be 4 points. So that started it off, and they got to see firsthand. That was yesterday's webinar. That's my point. Like, if I was by myself and not on a webinar right there, something probably would have been broken in my office, because I try to I try to contain myself. But back to your point, right? Like, everyone has a plan. What's the Tyson saying? Everyone has a plan when they get punched in the mouth. You know, I'm much better at nowadays. I used to be, like, back in my trading firm. Holy crap, it was really bad. Like, very immature. I understand, but you know, so a lot of times I let my emotions get the best of me. So what I was trying to say is my webinars help keep me in check that way, and I'm better at it too. You know, I rarely like lose my mind, like very, very rarely. Once in a while I do, and it's like a trigger, right? Like, when you have this trigger in your brain, like, there's certain things that if they happen, it's like I just go right down that rabbit hole. Like yesterday, like it was nothing. It was micro trade. It was like I lost like $160 because we're we're doing the Apex account in there as a strategy. But it doesn't matter about the money. It has nothing to do with the money. It's the principle of the thing, and that I started going down the rabbit hole there. But yeah, you have to work. It's called conditioning. You got to condition yourself, just like you got to condition yourself for this nonsense, right? If you understand this is what markets do when nothing's going on, you're not panicking and trailing your stop and doing stupid shit. Pardon my language, right? You're just letting it play. Same with the mental stuff. Like, the more you understand and the more you can catch yourself, and I talk myself off of it all the time, especially on my webinars. They'll hear me saying it, like I'm about to go on till, then I'll talk myself off of it. But that just comes with practice. Like, again, everybody has a plan and they get punched in the mouth. Everyone's like, oh, yeah, I'll be fine if I lose, like this one right here. How many people, like, literally just got off this webinar alone when this nonsense happened, the Christmas Day, let's rip 17 points because they have a 1-day Christmas truce. I mean, that if I was short there, trust me, this would be a different webinar right now. I probably would have just had to end the webinar. I would have been so mad. So I can understand, but even if I did, I can control myself. The point is, you're going to get this, you're going to have this happen. Did I mention the number one here? Anything can happen, but you have to go through it and learn to deal with it and condition yourself for when that happens. If you just took a loss in that, I guarantee a lot of guys on here did, guys and girls, you got to understand that stuff happens, move on to the next trade. Even losers. This could be a loser. Stopped out. If you have an edge, now we'll go into the trading in the zone rant. Here we go. Learn to trade an edge like a casino. And this is why we even have the new trade. And I've got literally 30 on the back burner that I'm going to introduce in my room as we move along. One is enough. I got enough questions on this one. But it all started just by trying this exercise. This is directly from Trading in the Zone. Get the book. The purpose of this exercise is to convince yourself that trading is just a simple game of probabilities. Probabilities. Nothing's for sure. At the micro level, the outcomes to individual edges are independent occurrences and random. What are you watching right now? Randomness. Why would I trail my stop down into randomness, right? I pull my stop away from important volume events. On to the rant. At the macro level, the outcomes over a series of trades will produce consistent results if you have an edge. Guys, I'm showing you the edge. I'll go to my grave saying this is the best edge I've ever seen in futures trading. I would say, I'm not saying I'm Mr. Lamborghini God trader, but I'm saying I have enough experience in markets. I say 25 years in trading millions and millions and millions of contracts that I can determine what is an edge and what is the best edge I've ever seen. And this is the best edge I've ever seen. So I know, even if something, say they come out and they say they're going to celebrate, they're going to have a ceasefire for Easter and it rips 30 points and I get stopped out. Okay. Am I going to be happy? No. Do I understand that could happen? Yes. Do I understand this is an edge? Yes. On to the next trade, on to the next trade, on to the next trade. Not, oh my God, I don't put on the next one because they may say Halloween is the next holiday and I'm gonna get stopped out. No, I know I have an edge. I put on the next one, and this is what he likens to the casino, right? And he talks about anytime you start to doubt and say, oh, I'm not going to take this one, just think of casinos. That's why they are in business, because they know over the long run, because of the math, aka edge, the math of their games, they will make money. There's going to be days, weeks, seldom months, but days and weeks that some whale comes in there and waxes them for a couple $1 million. They have that all figured out. Do they change the rules of the game? I shouldn't actually say that. They will. They'll kick guys out if they're counting cards. Don't even get me going down that rabbit hole. But overall, they don't change the rules of the game. If some guy comes in and beats them a couple days in a row for $3-5 million, they know over the long series of trades, macro level outcomes over a series of trades will produce consistent results. It's the same with a trading edge. If you have a trading edge and you follow it and you're consistent with it and you take as many as you can, right? And then we can go into this more as I catch my breath. But any questions on any of that, Bruce? Or not Bruce, Sam, sorry. As I watch it, I'll go fast.
Yeah, and I guess when you start having success, that kind of reinforces it as well. Like acts like a feedback loop, and you can start to believe it. But it's
absolutely.
It's a really good point you make. That a lot of people maybe don't realize your trading room, helps you, and it gives you kind of accountability. Having an audience, keeping you consistent. Yeah.
Right, absolutely. And as far as the success and the winners, that's exactly what I talk about. That's what journaling is, right? When you journal, you want to talk about the bad stuff, but you want to be documenting all your winners. And something I learned from, when I got back in the business 2017-ish, trying to find my trade room here. When I got back in the business, I was studying. I didn't want to trade futures. I wanted to trade stocks because I was beat up trading futures, right? So I went to stocks, and the main thing I was trading through S&B to S&B. They're not S&P futures. They're S&P whatever. They're very legit. If you want to trade stocks, they're your firm. So anyway, I was learning to trade stocks, and one thing they talked about, and this is where I have a problem, right? When I'm wrong, I want to know why I'm wrong. Well, guys, a lot of times you're not going to know why you're wrong because it's random. When nothing's going on, you're not going to know why this popped up, and a lot of the times, right? You want to know when you did it right? So we're doing this trade in my room, and I go in here and I show like the one trade that we're working on here. These are all examples of every single time it worked. We've got probably 100 of them now, only over 3-4 months. So the point is, when you have a winning trade, here we go back down to this spot gamma level. Hopefully, we can punch through here. Actually, we'll get into the footprint here a little bit too. Let's see what the footprint's doing. But when not that you don't want to, I still do it because I still can't stand being wrong. I want to know what I didn't see. It'll help you see what you didn't see. But spend most of your energy looking at the trades that worked and what worked in those trades. That's why I document everything in my room, as many as I can. So all you got to do is go back and say, okay, oh yeah, I saw this. Oh, I saw that again. I saw it again. Saw it again. Saw this tendency, right? And then you develop your playbooks. That's your edge. All right, let's look at, why am I losing my, oh, this is not the right, 1 second here. Let's get this back up. I'm incorporating footprint more. This is going to be a lot more of my room. Again, I use this so this got me into the whole rant with Dr. Steinberger. He sat behind me for a year. Anyway, he introduced me to Market Delta back then. And yeah, it's useful. I just never had a sustainable edge in it ever. And I used it for a long time because that's all that was available until Bookmap, right? And then when I saw Bookmap, I'm like, holy crap, this is like Market Delta on steroids times 1,000. So Market Delta is actually no longer a business. It shows you how well the footprint works most of the time, but there are instances that you can use it. What am I doing here? I'm trying to find it. Oh, I got it here. Again, this is very crude and not crude, but this is, this is somebody in the room that shared his with me. So in a Sierra chart, you got to do everything yourself. This is on Sierra chart. But so you can see here, look at the difference right now. This is where this can really help you, especially if you understand the areas and the setups and so on and so forth. This first time down, look at the delta. Came down a low, there's actually net buyers. Look at the difference now. Now there's net 1,000 sellers. This may just push right through now. See the difference? See how that can help you? Where especially it's important, say we're coming up to liquidity. Like we talked about how the markets run away from liquidity. Well, if you come to liquidity and you see that, you're like, yeah, I'm out. If you come to liquidity and you see that, you're like, yeah, no, they're going to punch right through there. Guys, this is what drives markets. This is it. I don't care what lines you have in your chart. They are insignificant unless the volume is actually occurring at that area that you want to see. So that I'm gonna be doing a lot more of that in my room. So this has a very good chance of punching through here. Let's see. If not, then this could be right, not for my trading, but if you're looking at this, so here you go, here's another 1,000 coming in, 867. So yeah, are the aggressors right now the sellers? Absolutely. But guess what? If they do that, and then they do that, and then this gets above, well, guess what? Guess who's off sides? The buyer or the sellers. And you can come up with a trade plan just on that alone. Without Bookmap, just this alone, you could, again, over years and years, I used Market Delta for about 12 years, right? I didn't see enough of an edge where, specific instances you'll see, and then, you can go long and then you place your stop right below there, so on and so forth. But with the Bookmap information and then this, then now you're talking about. My point is, if these sellers are now off sides here and they're getting aggressive, if you get back above 29, we're probably going to pop, right? That's not part of my trading plan right now. I'm starting to introduce it a little more, right? There's no reason to watch this thing come all the way back to the zone, especially at this time of day. If I, once I start to incorporate that, I do like the sellers are engaging, and my stop's already in on this trade. These are my current rules, so this is how I'm trading this. But it's just an example how you can keep an eye on this delta stuff, footprint, to determine, hey, what's different now from the last time this came down here, so on and so forth, especially at lows of the day. Right? Saw one yesterday. Actually, I'll show you. It was right at the end of the day. Let's see, this is on my other computer. Let me see if I can pull it up here. Let's see. Right here. That's it. Yep. So this is right at the end of the day. This led to I think it was like a 25-point move in the ES. Came down. So you had aggression, and you're also going to learn the more you look at this, hey, what's a lot of volume? So this is just that's the CVD. That's what Bookmap shows on with that line I was looking at, but this is showing you the total volume for the bars. When you start seeing this, stuff like that, okay, something's going on here. I'm ready for something. It's not just a signal in itself. A lot of times you're like, okay, there's some big money playing. Now let's see how this reacts. So you can see this came down here the first time, 700. It actually popped up. There was still net 700 sellers. Came down, sellers made a lower low. Buyers came in. These sellers offside, gone. Right? This could be a trade plan. This could be a specific setup you look for, especially say it's a prior zone or say it's liquidity or whatever. This is telling you they came down here, made a lower low, and why am I not seeing the sellers win? So what I'm saying is this exact scenario could happen right here. Am I going to trade it? No, because I just have not incorporated it enough right now, but I'm getting back in it. Now that I have all the information in Bookmap that I have, now I can make use of this, in my opinion. So I'm going to be doing a lot more than in my trade room as well. So let's see what happens here, right? This will probably lead right into the end of this webinar too, because you got your other guy coming on. So sellers that actually, remember, and if you're watching this was almost 1,000. So the buyers came in. Now, if this gets above here, you're probably going to see some kind of rip. If this holds and goes lower, well, guess what? This bar, even though this is why, it's another thing, you got to be keeping an eye on this, right? Because you're just like, yeah, they're all buyers. Well, this was negative, almost 1,000. The buyers were very aggressive here. Guess what? If this comes back and gets below here, well, you still got these buyers that are underwater that somebody just laid into. Now, these guys, whoever bought the spot gamma level, said, yeah, we're going, and this doesn't go. That's going to lead to the next wave. So this is how you can use this stuff. And I'm going to, like I said, I'm going to be doing a lot more of it in my trading. Let's keep an eye on this. But I have, again, there's a very good odds we're coming down to this right now, first and foremost. That's probably who was part of the selling. Whoever's sitting here, like I told you, the games I used to play, this is exactly what I used to do. I'd put in my 1,000 lot, and I'd wait, and then I would lay into it, and then I'd try to get some guys on my coattails, and they push it right into my bid, and I'd be out. So I can promise you some of that liquidity is probably some of these sellers trying to push it into their liquidity right here, this 1,000 delta. A lot of numbers and stuff today. Something else is coming out. I think it's some auction. Let's see, 4-week bill. I don't really trade off of that, but sometimes it does have an effect. And then let's just take one more look at this, the heat map. Or I keep calling it heat map, but the Bookmap is a heat map. This is trader map. Look, guys, I mean, it doesn't mean, so we did a room webinar with Bruce a couple weeks ago, and you guys have access. That's another benefit of my room. You have access to like 500 prior webinars for the last 2 years that I've done. Bruce came in last week or 2 weeks ago. He talked about, we had this exact scenario. It was actually the other way, and you saw liquidity and then a bunch of liquidity. It was actually liquidity was above that day, and we were doing one of these. And he's been giddy. Like I told you guys in the webinar I did with him, the last couple ones. The last time he was as giddy as he is now about this stuff is on the SI indicator, and I didn't listen to him for like 3-4 months, and then I finally looked at the SI indicator. I'm like, holy crap, man, you are right. That's the most powerful thing I've ever seen. So the last time he's been that giddy, I mean, this is the first time he's been that giddy about something that they came out with. So the point is, this stuff was like all up here, and we were doing this. It was like in the middle of the black hole. And I'm like, well, how are you determine which way you want to go? And he has certain things he looks at too. He's like, well, I just wait when I see the buyers engaged, then I get in and I try to ride it to that liquidity. And literally watch the webinar in my room. The buyers came in, you like saw blue bubble, and I think there was a stopper or something. He's like, yeah, I get long right here, and we went right to all the liquidity. So that's how you can kind of judge. It doesn't mean we're coming here right now. This could play games for the next hour. You get a volume event or whatever you look for, and it breaks it. Those are your targets. Simple. Trading is simple, not easy, but you can make it simple. Make it simple. On that note, still short these markets, still planning to get tortured. I'm hoping this can break here, but probably won't. And I will adjust if a new volume setup comes in. Keep an eye on this. And I'm short NASDAQ as well. Got a round of golf at TPC. If you guys want to come out, I can cash out right now. We can play some golf. And that's all I've done. And any other questions, Sam, before I...
Yeah, one final quick question, hopefully. Slowdown in Discord is asking about the footprint chart. Is it a 1/8 PNF?
I don't even know. I know it sounds pathetic. It's something like that. Again, someone from my room shared this with me because I was starting to build mine from scratch. That's the one thing about Sierra Charts. It's a great program. It's cheap. It's cheap for a reason because you have to build every single thing yourself. So anyway, I just brought in his thing. I mean, I'm sure there's a way there. Tell me how to do it, and I could tell you. Let's see, studies. Let's see what it is. Like I try to look at this, and I get lost. Number bars. Let's see. If anyone knows, tell me, and I'll show you what this is set to. You know, back in the day when I was using market profile, yeah, I would use the 1 and 8. So the point figure is just every time it goes a certain range, it builds a new. So I'm assuming all you gotta do is look at it. Actually, let's just look at it. I think it's probably a 2-point. Let's see. This one was 31 down. This one looks like a 4, about 2.5 points, 3/4 points. This one was from 2850 down 2475. So it might be a 10 or 11, maybe. If you know a better way to do it, I just illiterate when it comes to the technology stuff. I just brought this in recently because I wanted to start to watch, especially for the reversion trade we're doing. I want to make it better because it's a very raw trade. And I know there's ways to make it higher percent, higher probability trade. So that was the main reason I started wanting to get back into the footprint. So anyway, he shared this with me. If you know the better, are you getting any answers on how to show the exact settings for this, Sam?
No. Charlie says upper left 3.75 range bars.
Oh yeah, there you go. There
Yeah.
you go. So I thought I was just under 4. There you go.
Yeah.
So it's just range. So every time it moves outside 3.7 points, it draws a new. You can use 5-minute. Different guys. So this is more of a subjective type of thing. Some guys have 5 minutes. Some guys have 10 minutes. Some guys have every 2 points. Some guys have every 4 points. You got to determine for yourself. This is fine for what I want to see, right? Because imagine if you have this at 5 minutes. Well, this is going to look different from 921 to 925. This whole bar is going to look different with your delta. It's going to actually probably show up pretty close to a positive delta. That's a whole different. That's another reason that I couldn't really find a perfect way to use the footprint, because you look at it one way, it shows you one thing. You look at it another, it shows you another, right? So this is fine for what I want to see, especially when it makes new lows. You want to see, hey, the buyer's engaging. So this should rip. I mean, but just based on this, I'm not trading this. I'm just giving you an example. These sellers were aggressive. There was aggressive sellers here. We watched it was 900, and then as it came up, it got down to 100 and ended up being like still minus 300. Then you had buyers. Well, these are invested traders. This should rip. Should. If this doesn't, what does that tell you? Next time down here, bye-bye. And I still think that's going to happen, but this is how you can use this. Still very subjective. This is not. This is not subjective. How you trade, we talk about this every webinar too. Guys, this is the science. There is no disputing these were stop runs. Actually, what was this? This wasn't threshold, was it? In here, no, it wasn't threshold. This is the science. This is what I draw. Actually, it's not that. Sorry, it was this over here. Right? This is. There's no disputing. There were 900 Ukraine Christmas stop runs. Right? There's no disputing. There was almost 700 sell ice here. How you trade it is the subjectiveness. I highly recommend you trade it in some shape or form the way I'm trading it until you understand what the hell you're doing. Then you can tailor it however you want to tailor it. Right? If you come up with a better way to trade it, let me know. I'm always open. I'm always. You have to adapt your trading. This is why the way I trade these are different than I traded them 2 years ago. I still, in my course, is still really relevant with the with the thresholds and how and what the setups are, so on and so forth. But I trade them a little differently with the ATR, and hopefully you can gather enough here to understand, if you do have the old course, how to trade them. If not, join my trade room. Yeah, it's pretty inexpensive for the information you get, I would think. Other than that, those are my rants. A lot of talking today, and some trading. That's about it.
Okay.
Any other questions? If not, I think I'm in your other guys' time.
Yep, let's call it there then. Thank you, Scott. Good stuff as always. Appreciate you sharing your experience with us. And guys, if you found this useful, please smash that like button on YouTube. We had one guy in the chat asking about the trading room. So if you do want to learn more or hear more from Scott, check out his website, scottpulcinitrader.com, and the details are in the description of this video. So yeah,
guys, it's right. You just go here, right? So it's all here. Just go in here. You get your different, and then you get percentages off my courses and stuff as well. This is only through my site. You can also get in the Bookmap marketplace, but you don't get the discount on. You get the discount through my site. Based on whatever plan you do. That's all I got.
Okay, thank you.
Zero this afternoon. Hopefully there's no Easter Ukrainian. I don't mean hopefully there's not a ceasefire, but hopefully it doesn't affect the markets like this ridiculousness did.
Right. Okay. Thank you. Thanks, guys.
All right, guys.
See you again next week. Yep.
Thank you. Sam, appreciate it.
Bye-bye.